Good morning, welcome to Phillip Securities Weekly Market Outlook. May was a bad month for the stock market. The old saying of sell in May does hold some truth. Looking back at the previous 2 years, the STI did fall in May 2010 and subsequently in May 2011 as well. And this year, the STI tumbled 7%, while trading volume was at its lowest year to date. At this juncture, risk aversion is evidently heightened. Traded volume decreased in May month-on-month, while traded value has been low for the past 3 months, notwithstanding spikes in volume in certain months. This implies that market activities are mainly dominated by the small cap stocks, and this does not reflect real strength in the market. Well, if you have sold in May, when should you buy again? No firm answer to that. However, what we can see from past years' market movement is that currently the STI is trading close to the support level of -1 standard deviation. And you can see that in the past 1 year, -1 standard deviation has been a very strong support level. The index bounces off whenever it touches this support. Going further back to the previous crisis during the Lehman period, valuation crashed and fell to below -2 standard deviation. Therefore, unless the current circumstances deteriorate to those of the previous crisis, it may be a fair bet to expect valuation to stay above -1 standard deviation, and this puts the STI at a support level of 2569. What is keeping or what can keep the market alive now is the anticipation of accommodative government policies, the deterioration of the euro crisis, the weak global economic outlook, all points to a heightened possibility of near-term stimulus measures. That's all we have for this week. Thank you and see you again.